Welcome back, folks. Welcome to the Sooner Pro Gaming channel, where we talk about stocks, we vlog, we game, we kind of all around, man. We're a master at all things. We try to master money management, finances. We try to help people, you know what I'm saying, master and get up on their levels of, you know, maximizing skills and just doing a different bunch of things, you know what I'm saying. We all around, so you might find anything on our channel. So, and we upload, you know, videos weekly, daily. You know, we just upload different things. But today we're gonna get into some finances, some stock stuff, you know, that you should consider for your portfolios. Today here we got 10 stocks that you should consider for your portfolios. You know, long-term investing. You know, long-term investor can always come out on top by beating the odds of the fluctuation, the volatility. You know, like around this time, we got the war, we got all type of crisis, we got inflation, we got a lot of different things that can, you know what I'm saying, kind of hinder our portfolio. So these are good 10 stocks to consider. These are top quality stocks. The first stock we got is Tyson's Foods. The second stock we got is State Street Corporations. The third stock we got is Equifax. The fourth stock we have is W.W. Granger. And the fifth stock is ADP. The sixth stock is Lowe's. The seventh stock is McDonald's. The eighth will be Aflac. Number 9 is Dollar General. And number 10 is Johnson & Johnson. So all these stocks is good quality stocks that you consider for your portfolio in 2022 moving forward as we progress through this year. So we're going to go in alphabetical order. And our first stock we have is Aflac. Many probably already know about Aflac services. You know, the commercial with the duck quacking along. So today, as we view it here on this good old day, we got Aflac trading at $62.95. And Aflac over the past month is down 19 cents, which is 0.3%. So it's kind of down a little bit, 19 cents overall. So we're gonna move up and see. Over the past 3 months, Aflac is up $6.94, which is a 12.39%, which is 12%. So over the past 3 months, Aflac has went up 12%. And we're gonna look how far from year to date. From year to date, Aflac is up 22.59%, which is $11.60 gain for the past year, which is a pretty good gain. You know what I mean? Everybody wanna, you know, they consider 10%, 3%. You know what I'm saying? Increases in a portfolio. This one have increased to 22.59%. So, you know, the ticker symbol FAL is a good stock to consider overall, and we just gonna kind of keep that on the radar for our 2022 year and see how far it can get over the past year. So our price range is $62.95. Not a bad stock, not a bad price to get in and see where you can go. Let's check out. Okay, Aflac pays a dividend of $1.60 per share, which is a 2.54% dividend. And that's something to consider as you know, so you can add this to your dividend portfolio. You know what I mean? So that's a pretty nice play. So we're gonna move on to the next play. We're going in alphabetical order. We got Auto Data Processing, which is ADP. ADP, you know, if we punch in the clock, we all should be familiar with ADP. It's a data service where they collect all the hourly wages and things like that. So ADP right now is trading at $214.11. So that's kind of a, you know, it's up there in the hundreds range. You know what I mean? So what they usually say when these stocks are trading up in the hundreds to 200s range, you know, a lot of people ain't really just getting in. You know, they kind of got big investors. We got whales, we got investment funds, different funds that's getting off into these plays. So we're gonna look at ADP processing. Over the past month, it's up 6.5%. Excuse me. And that's $13.02. So As we can see, our market has been coming back slowly but surely since we had the bear market. We had crashes, corrections, all that things, you know what I'm saying, including all this disasters and different things like that. So ADP, we're gonna look at what it's up over the past 3 months. Actually, over the past 3 months, it's down 5%. It's down $11.50. So, it might be, it might be a good price range or something to kind of dive in, you know what I'm saying? But make sure you always do your own research. This is just advice and wisdom that we just putting out. It ain't no financial advice to you. Even though we are, we are qualified. We do got a bachelor's in management and ethics, financial management. So we kind of qualified in our studies and what we're doing. So let's just move on forward. For the year, over the past year, auto data processing, which is ADP, is up 15.5%, 15.56%. We just say 15, 16%. It's up over the year, and that's $28.94. So if you would have bought Aflac 1 year, past to the day, you'd be up 15%, which is a tremendous gain. You know what I mean? So consider ADP for your stock portfolio, and it as well pays a dividend of $4.16 per share, which is close to 2% yield. You know what I mean? So that's a pretty nice yield. And I'm pretty sure, you know what I mean, if you punching the clock, you know what I'm saying, you're doing all this in your job, records, processing, and data through ADP, why not turn some of that money that you're making off your job and put it into a stock? You know what I'm saying? Like, we always consider invest in what you do, invest in what you know, invest in, the simple things that you can understand what you do. It simply processes all the data for your hourly wages and helps corporations out and process data automatically. So consider ADP for your stock. So we're gonna move forward on our third stock. We got the favorite Dollar General. Everybody know about that DG, that Dollar General. And Dollar General is currently trading at $229.63. Another top 100. When we say top 100, it's over $100, which means that a lot of people, they try to steer clear of these high stocks, but these are some plays to consider. You might go out and buy some shoes, a couple hundred. Everybody trying to, get their drip on. So when you buying things that don't hold value, consider, try to, add Dollar General to your portfolio. You don't gotta pick all these stocks, but just consider a few. You know what I'm saying? Just tap into a few. So we're gonna look at, over the past month, Dollar General is up 16.64%. And that's a $32.76 gain over the past month. Tremendous gain, you know what I'm saying, over the past month, which I believe when everything crashed down, it took a crash with it, took a correction. So if you got in these plays back in the past month, you'd be up 16, close to 17% right now. And that's tremendous. So we're gonna look over at the past 3 months. It's up 4%, which is another $8.92, close to 92 cent, $9 gain over the past 3 months. Okay. So we're gonna look at how much is up over the past year. And this one is up 28% over the past year. And that's a nice 50 piece, nice $50.23 that you would have got on top of your, on top of your gain. So let's do a little math. Go to look at our calculator. Always have your calculator handy so you can add these digits up. Okay, so in the past year, you could have bought it at $179.40, and then you would have been up 28% on Dollar General. That's a tremendous gain as well, close to 30%. So keep that in focus. As well as Dollar General pays $2.20 per share. You know, close to a 1% yield. Not, you know, kind of iffy, but compared to the gain, to the, you know, the stock appreciation over the past year, that would have been awesome. Very awesome. So consider Dollar General for your stock portfolio. Okay, we're going to move on to our fourth stock. Our fourth stock, we got the great Equifax. You know, Equifax is one of the credit bureaus that track your credit, you know, credit score, credit history, all that type of different stuff. So consider Equifax. Equifax is currently trading at $241.11. Let's check out how much it's up over the past month. Over the past month, it roared back to a 15% gain. And that's a $31.50, you know, appreciation in your stock value. So Equifax is a good, but check it out. Over the past 3 months, it's down close to 12%, 11.58%, which is $31.57. You know, that's how much it's down right now. So you might, you know, consider that and try to see how far it rolled back for the year. You might can get you a, you know, if you buy it at this price, you might can get you some, you know, 11%, 12% or more for the year. You never know, it can go down. But that's why you got to do your research. Make sure you consider a great financial advisor. You know, we always consider the people that say great counselors, great men, great women, experts around this stuff. It's always good to have on your side, you know what I'm saying? So you can just tap in with them, you know, tap their minds, pick their minds. So don't hesitate to go out there and try to get you some help, get you some great counselors. Great counselors make wise decisions for yourself as well. So we're going to look how much is up over the past year. A whopping 40%, folks. Tremendous gain. And that's close to $70 appreciation on this stock. So let's just do some quick math on our calculator real quick. So if it's $241.11, let's do some quick math right now. You could have bought this stock at $172.07. And for the past year, you will be up 40%. So this is the biggest, you know, percentage of all. So consider Equifax. Everybody is, you know, got, you know, we would say good common thing with Equifax, because it's your credit score. Whether you really know too much about credit or not, whether you know, pay attention to your credit score, but you do have some numbers in Equifax. So just pay attention to that. And consider Equifax to your stock portfolio. So we're gonna move on to our fifth stock. Everybody know the great Johnson & Johnson. You got all type of products. You got your medicine, you got your medical, you got your baby powders, you got your baby oil, you got all that type of stuff that you consider, you know, that you buy for your little ones, that you know, medicines you might buy, different things. Johnson & Johnson is an overall company that provides great products that you will see in every type of convenience store, Walmart, Target, all that stuff. All these, you know, is, you know, products of J&J. So consider J&J for your stock portfolio in 2022 if you already ain't got it. You know, I see a lot of people, you know, a lot of wise minds on, you know, they're talking about they love this stock, J&J. And J&J is currently trading at $174.56 right now. Over the past month, it's up 7.5%, close to 8%. And that's a $12.11 appreciation in the stock value. So consider J&J, folks. Over the past 3 months, it's up 4%. This stock right here, it really don't just bloom off, but over time it increases, and it don't never really just, you know, go down. And it's one of the dividend aristocrats, which been paying dividends for decades. You know what I'm saying? So consider J&J, and over the past 3 months, like I said, it's up 4%. That's a $6.75 appreciation to the stock value. So over the past year, it's up 8%, 8.63%, close to 9%. which is a $13.87 appreciation in stock value. So make sure you really consider J&J for your stock portfolio. And as well, it pays a $4.24 dividend per share, you know what I mean? Close to a 3% dividend yield. And they've been paying a dividend time after time, year after year. So really consider J&J for your stock portfolio. Okay, so as we move on to our sixth stock, we got the great Lowe's company. Everybody know about Lowe's, man. You know, especially if you're a homeowner and you got rentals or you just doing different things. You ain't even got to be a homeowner, but it could be some things that you could need, you know, from anywhere from water test treatments, because on water, you know, it's kind of iffy. I see a lot of stuff online of home improvements, all that type of stuff that you can consider at Lowe's. And Lowe's is a good stock. Over the past month, it roared back close to 7%, 6.92%, and that's $15.27 stock appreciation. Okay, so over the past 3 months, it's still down 3.78%. It's down $9.28. So consider this. It may, like I said, it may go down, it may go up, but over the long term, as we've been watching these stocks and stuff, ever since I got into the stocks, ever since we look at history before we was even born, look at the great Warren Buffetts, all these people, they always say long-term stocks always appreciate in value over time, you know what I'm saying? So a long-term investor over time can win in the market by, you know what I'm saying, not really trying to active trade and, you know, get in when stocks is in corrections, bear market, stuff like that, because they will roar back. If these stocks have good financial statements, good income, people coming in and out, buying, profits is increasing, there's good chances of these stocks is going to continue to grow. So over the past 3 months, it's down close to 4%. So you might got a good chance to get some entries. You know, just kind of watch stuff. You know, we might get some more down pressure, volatility with this, you know, war and crisis stuff going on. But it might continue to roar back. Like over the past week or a few days, these stocks have been rising back up, getting some of their gains back. Okay, let's look at, over the past year, it's up 35.41%. So close to 36% is up. And that's a $61.70 appreciation on this stock. So again, these are all S&P 500 stocks. So they say if you really don't know the stocks to consider when you're trying to get in, if you're a newbie, you're a rookie, or amateur, even a sophomore in the stock game, you consider stocks in the S&P 500. Just make sure you do your due diligence and study, do your research, and always, you know what I'm saying, pick up that line and try to get onto some experts and get them on your team. So consider Lowe's. Okay, we're going to move on to our seventh stock. And everybody know about that great Mickey D's, you know what I'm saying? You know, if you got little ones, you already know they going to go on some McDonald's, they go on some nuggets, you know what I'm saying? Get you one of them Big Macs, you know what I'm saying? We trying to get our Mac on, you talking about, you know what I'm saying? So let's just see what the old Mickey D's is talking about. MCD is a stock ticker, okay? So McDonald's right now is trading at a price of $238.92. And after hours, which is on Friday, went up to $239.47. So let's check it out. Let's see what it is. Over the past month, it's down 5%. It's down $13.53 on the value. So let's go up 3 months. 3 months is down 7%. Close to 8%. It's down $20.71. I think I sold it around like $2.50. I had a couple stocks, I sold it around $2.50. So, you know, we can get back in at around this price. You never know. You just gotta kind of, like I said, dollar cost average in, because if the stock go down with volatility, you can dollar cost average. You ain't gonna just throw all your money in at once, and you know, you kind of looking at your portfolio with a frowny face because it's kind of down. But don't ever get discouraged. Never. Because over the past year, this stock is up 7%. It's up $16.16 over the past year. So we're going to look at the dividend. all these stocks from we've been saying that they paying dividends. This one paid $5.52 dividend, which is a 2.31% yield. So, and we know everybody all across the world is watching some of my guys when they be over the world doing their vlogs and stuff. They got McDonald's in all these different countries. So it's gonna be around. And McDonald's is just not a food company. It's also a real estate tycoon, you know what I'm saying, behind the shadows. So they own a lot of their land and property where they buildings are. So consider McDonald's for your portfolio, and as well it pays a dividend. So we're gonna move forward to the A stock. We got State Street Capital, which is a corporation that provides investments, different kind of avenues for people to invest. They loans, they do different type of things like that. So really never heard too much about State Street Capital, but and this one is kind of in the range. Right now it's trading at $88.93. And over the past month it's down 5.51%, which is $5.19. And it ain't really hit that top 100 right now. So we saying top 100, it ain't went over $100. So if we consider buying these stocks anywhere from $15 in a good place, and you wanted to get the top 100 over long term, that's a tremendous gain with stock appreciation. But it's close to being at $100. What you think? Do you think State Street Capital will make it to $100? Will it get in the top 100? Okay, so we got over the past year, State Street Capital is up 5%, 5.26%, and that's a $4.44 appreciation on the stock value. So consider State Street Capital for your investment fund. Let's see. Okay, it also pays a dividend per share of $2.28, which is around a 2.56%, 2.5%, close to 3% yield. And you might consider, tapping in and you look for loan, looking for avenues that help you out in your daily life, how you can consider it. So just keep that on your radar. So we're gonna move forward to our next stock. And we got Tyson's Food. Everybody should probably know about Tyson's Food. When you go to the grocery store stopping for food, they got the chicken legs, different type of, meat products and different things like that. We're gonna check it out. Over the past month, it's down 6%, 6.03%, which is a $5.60, decrease in the price. And it's currently trading at $87.31, excuse me. Okay, over the past 3 months, it didn't jump back a little bit. With a 3% gain, came back, increased in value, $2.60. Okay, over the past year, it's up 14%, close to 15%, and that's a $10.84 appreciation on the stock value. So always consider Tyson's Food. You know what I'm saying? And like I say, make sure you always do your research, folks. So we're gonna move forward. We got another stock. We got ticker symbol GWW, WW Grangers. And this stock, woo, it's a whopping $501.95. Almost like a big funded stock. So we're gonna check this out. I remember this stock on my radar. I don't believe it was that much. And I wish I would have bought it. Over the past month, it's up 5.62%, close to 6%. It's up $26.72 appreciation on the stock value. Over the past 3 months, it's up 2.75%, close to 3%. And that's a $13.42 appreciation in the stock value. So we're gonna move. It's up over the past year. It's up 23.78%, close to 24%. You know what I'm saying? They say anything 8%, 10, 20s, 30s, 40s. you're doing good if you picking these type of stocks in your portfolio. And this one's up $96.42 over the past year. So this one, I'm gonna jump out over the 5-year term just to see. Okay, over the past 5 years, because I remember when this stock it was kind of low. Over the past 5 years, it's up 105%. So the appreciation on this stock is $257.87. That's a nice appreciation on the stock over the 5 years. You know what I'm saying? Because 5 years go by quick. You know what I'm saying? We got kids, they look up, they already having babies. You know what I'm saying? You look at your age, you say, man, I'm getting old. You know what I'm saying? So when you investing and you trying to build wealth, these are the type of plays that you look for, that you put in. You know what I'm saying? In your portfolio. Okay, yeah. Sorry about that, folks. Man, my memory cards ran out. That's what we got to invest in, some bigger memory cards, man. They running out of space. Okay, so where we was at, we was talking about WWG Granger. It's up $257.87 over the past 5 years. You know what I'm saying? So keep this in mind when you're investing in nice quality stocks for the long term. And we ain't gonna hold you guys up too long. We just want to jump online and just, you know what I'm saying, try to share a little bit of our wisdom, try to, help some people out, put it on their mind with some different stocks that we got. So, you know what I'm saying? So basically, make sure you guys consider some of these 10 stocks in your stock portfolio, you know what I mean? And just, follow the channel, Sooner Pro Gaming. You know what I'm saying? You live with Rafe. So, Rafe is coaching right now. So always just be familiar with me, you know what I mean? And it's just we got a lot of minds in here, so we can't help you guys out sometimes. So make sure you just stick around with us. Subscribe to the channel. If you can, help us out with a couple likes. You know what I'm saying? Share these videos so these people can get out here and invest. Thank you guys. We'll see you later.